Hello friends, welcome to Investable. Today we are going to learn about option selling strategies with low capital. So I have explained some directional and non-directional option selling strategies with less margin. Before going into the video, please subscribe to my YouTube channel. Also join my Telegram group where I will be posting all my trades, strategies and live adjustments. Let's start the video. Generally, option selling requires huge margin. For example, if you want to sell one lot Nifty or Bank Nifty, we need minimum capital of more than 1 lakh or 1.5 lakh. So here I am going to explain how to reduce the margin money and create some low risk strategies. Now we will check how much margin required to sell one lot Nifty or Bank Nifty. Okay, for that open Zerodha and go to orders and go to basket. You can create a new basket with any name. So I am creating for Nifty, and now you select Nifty strike price. Okay, so now Nifty trading at 17,850. So I am trying to sell 17,900 call. Let's say I am assuming the market will go down from here, so I am selling a call option. Okay, 17,900 call, it's trading around 95 rupees. Okay, I am going to sell one lot and we will check the margin requirement. So we need approximately 1 lakh capital. Okay, so this is required margin. That means 1 lakh 2,000 required in your account. So 97,000 will be deducted after executing the trade. Okay, now we will check for Bank Nifty. So I am creating another basket with the Bank Nifty. So what is the Bank Nifty price? 37,830. Okay, assume that I am going to sell 38,000 call. So I am taking a bearish view. Okay, I am going to sell one lot. So look at this. We need almost 1.5 lakh to sell any options in Bank Nifty. So now I am going to tell how to reduce the margin money as well as reduce our risk. So today I am going to explain 2 to 3 low risk strategies. So please watch carefully. Okay, first we will see how to reduce margin money and risk. Just to open this Nifty and edit. So already we sold 17,900 call. So now I am going to buy 18,000 call. Okay, add this. So now you see we need only 20,000 margin. Okay, so actually what we have done, we have hedged this position. So hedging means we are protecting from unlimited loss. So actually if you see, we need 1,05,000 to execute this trade. So to avoid that, so simply you can always execute buy position first. Okay, now you see only we need 25,500 in our account. So after executing the trade, 20,700 will be deducted from our account. So in this way we are protecting ourselves from maximum loss. Also we are reducing the margin money. Also we will check Bank Nifty as well. Okay, we sold 38,000 call. Suppose if I buy 38,200 or 300, 38,300 call. So what is going to happen? So we need only 23,200 margin. So always keep the buy position first. So we need 30,300 in our account before executing the trade. Okay, after executing, 23,200 will be deducted from our account. So now we will see some practical example. So I have opened Bank Nifty chart. So this is in 1 hour time frame. So now what the market is trying to do, so we have a double top here and I am expecting market will go down. So I am taking a bearish view. Okay, so this is just my assumption. You can do your own analysis and you can create your own strategies. So now I have opened opstra.definage.com. So I used to create any option strategy using Opstra. So I will give this link in the description. You can log in and you can create your own strategy. So in Bank Nifty, I am going to take some bearish trade. Okay. So select the Bank Nifty here and go to options. Select the expiry. So either you can do it for weekly or monthly or daily also. So now I am going to create for weekly expiry. So what is the current price? 37,830. Okay. So as we seen earlier, I am going to sell 38,000 call. So I am taking a bearish view. So I am going to sell one lot. So please always remember, execute first buy position. Okay. Just for creating strategy, I am selling first. Okay. When you are trading on the real time, so always go for the buy trade first. Then you can do the sell trades. Okay. I sold 38,000 call. Okay. Now I am going to hedge this by buying 38,300 call. Okay. So this is our payoff chart. So what is our break even? So 38,092. That means, so if the market goes beyond 38,100, we will be in loss. So if market stays below 38,100, so we will be in profit. So what is the maximum profit? 2,300 and maximum loss 5,190. So we should always calculate what is the percentage return we are getting in option selling. We are getting almost 9% return from this trade. Okay. So what is the margin required? 26,250. So in Opstra we will not get exactly same as Zerodha, but it will be more or less same. So this is one of the directional strategies where you can sell options for less capital. Similarly, if you are bullish about the market, so you can go and sell the put options. Okay, now we will see some non-directional strategies. So let's open the option builder. So I am going to Bank Nifty. So the safest non-directional strategy is iron contour. Okay. So in Opstra you have different strategies. So where you can directly create the strategies. You can change the strike price here. Okay. The same thing I will create from the option chain. Okay. So now Bank Nifty at 37,800. So I will sell 38,400 and 37,200 put. So now we have to hedge these positions. So I buy 38,800 and 36,800. You have to buy. Okay. So now see, we need around 50,000 margin for the iron contour strategy. Max profit 3,700, which is 7.5% return, and max loss 6,200. So if our view goes wrong, so always we can adjust the strategy and we can come out with profit. So if you want to know how to adjust iron contour, I have made another video. So I will give the link in the description. So you can go and check that video. Okay. So this is a non-directional strategy. So now we will see another strategy, more or less similar to iron contour. So I am going to edit in this strategy itself. So what we are going to do, we are going to delete these hedge positions. So 38,800 we bought, I will delete this, and 36,800 we bought. This also I am going to delete. So what I am going to do, I am going to next week expiry, that is 7th October, and I am going to buy call and put with same strike price. Okay. So open the option chain. So we are at 7th October expiry. So on 30th September, we sold 38,400 call. So at the same strike price, you buy 1 lot for the next expiry. So also you can buy 37,200, put 1 lot for the next expiry. Okay. Now see the payoff chart. So whenever we go towards downside or upside, we will make a good profit. So look at this payoff chart. On 30th September, if the market closes between this range, we are going to make profit. So particularly if you are ending at 38,300 or 37,200, we are going to make a good profit. So this is one of the non-directional strategy. So the margin required is 44,000. So these are the 3 option selling strategies with low risk and low capital required. So I will give more details about these strategies in coming videos. Please subscribe to my YouTube channel and like the video. If you have any questions, please let me know in the comment. We will meet in another interesting video. Thank you for watching.